Hey everyone, Coach Investor back to another video for today. So, we know everybody loves PayPal these days. I know myself, I've covered PayPal a lot. I have a small trading position on PayPal because, well, I do think that the company is extremely undervalued. But despite that, I still think we cannot forget about the other big fintech player that is still down around, 70%, maybe even more from its all-time highs. Now, I have to say, just because a company is down 70%, 50% doesn't matter from its all-time highs, does not automatically mean that it will ever get back to those highs. Whether it's PayPal, whether it's Square, Twilio, any other company out there, it doesn't really matter. Just so you know, that's not why you should be buying a stock. You should be buying a stock because the price is extremely low compared to what the business itself is currently representing and its growth trajectory. Now, with regards to Square, Block, should call it, even after a year plus of the name change, I still call it Square. With regards to that company, there is a lot more growth than with PayPal. But on the profitability side of things, it's the opposite. Now, if we go and look at my little dashboard here for a Block, this is, by the way, on Coifin. If you want to try it out, link is down in the description. So, PE versus mean in the last, since it went public, so its lowest it's ever been was not so long ago actually, was at 17.5 times PE in the next 12 months. Currently we're at 23 times PE with a mean of 105.6 times. Of course, this is because previously the stock was just extremely expensive. Now, one thing I have to mention here, and this is also one of the big differences between buying Block today and buying PayPal, is that Block since 2015, shares outstanding have gone up 87%. Of course, if you exclude the huge jump we had a year and a half ago, that would have been 40%, but since the acquisition of Afterpay, we are now at 87.26%. Now, despite that, we also, when this is, by the way, actual sales numbers versus the estimates, they have been beating that across the board besides 3 times. With regards to EPS, same story there, besides a couple of times. But shares outstanding have increased 87%. Sales has increased. We went from $134 million all the way to $5.62 billion. Now, that's not to excuse the dilution here. It's just to show you that sometimes there is dilution, but there is also extreme revenue growth. Now, over time, you would love to see shares outstanding come down. And that's when the share buybacks come into play, which we're going to talk about in just a bit. Now, if we shorten the time frame, I've put here now 5 years, so since 2018. So we get a bit pre-pandemic, in the pandemic, and now post-pandemic as well with regards to PE, EV to EBITDA, price to sales, price to free cash flow as well. Clearly, you can see we are still much lower than its 5-year mean. Year to date, we're up 3.5%. But since the lows from a month or so ago, when they reported earnings, we're up over 60%. So quite an outperformance there. That's what happens when there is suddenly a huge disconnect between the business and the stock. And also, by the way, macro may be improving a bit. Fintech stocks will get loved yet again when interest rates will be peaking. Probably they are peaking already right now, and there will be rate cuts. Should be a tailwind for companies like Square, like Block, like PayPal. We've seen with Affirm as well, the stock has been mooning for the last couple of weeks. So yes, with regards to Block, it makes completely sense why this stock has gone up. Now, with regards to PayPal, why has that stock not moved as much as Square? Because, we have a CEO change. There's still some core issues with regards to margins, transaction margins. We don't know if the new CEO will be able to turn the whole company around. Growth rates aren't as high as with Block, so there are more questions there. I've covered PayPal in the last video. If you want to check that out, it's going to be in the top right corner. And I will make a bear case scenario video in the coming days as well. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, one of the other reasons why a company like Block has gone up in recent weeks. We've covered the Black Friday Cyber Monday winners already. That video will also be in the top right corner, but I do want to read you a couple of stats from the company itself. So first, start off with a couple of comments here. During the Black Friday Cyber Monday shopping weekend, consumers turned out in droves to support their favorite businesses. We found that the holidays aren't just for traditional retailers, as businesses across industries like restaurants and beauty lean into the major weekend. Given consumer sentiment has been positive around the holidays, and we know this weekend is often just the beginning, businesses should continue to expect an influx of shoppers and be ready to meet them wherever they prefer to shop. By the way, I know I'm already going to get some comments from this. Yes, the rise in price of Bitcoin is certainly also one of the reasons why Square has gone up, Block has gone up. Now, if we go and look at the stats that they provide here, so purchasing power, 70 million total sales transactions made by Square and Afterpay sellers, 14% growth in sales transaction made through Square and Afterpay sellers year over year, 9% growth of Square and Afterpay sellers who took transactions both online and in person year over year. And this is also one of the big and key differences here. PayPal, for some reason, has not been focusing on in-person shopping, in-person pay, point of sale system, stuff like that, as much as companies like maybe Shopify or even Block. And I think that's a missed opportunity. Maybe that will change moving forward. Moving on here to commerce habits. So 15% growth of in-person shopping year over year. You see why this is a big opportunity. Online cart sizes were 3.9 times larger than in-person cart sizes. 338,000, that's the number of physical and e-gift cards purchased. And the top industries for gift card purchases were food and beverage, retail, beauty and personal care, healthcare, and fitness. As for sales strategies, the average discount offered was 22%, 35% growth in businesses offering discounts year over year, 1.2 times how much larger purchases with a pre-order versus the average order through Square Online, and there was a 31% growth in subscriptions activated year over year. Moving on to holidays, go beyond retailers. So there was a 15% growth in restaurant transactions over Black Friday and Cyber Monday year over year, a 23% growth in restaurant offerings Black Friday and or Cyber Monday discounts year over year, 108% growth in beauty sellers offering Black Friday Cyber Monday discounts year over year. And then if we look at the most popular time for beauty appointments during the holidays, well, it's basically this. And here is the big trend that we have been seeing actually in the last couple of weeks, which was buy now, pay later. So there was a 19% increase in buy now, pay later purchases through Afterpay year over year, a 47% growth in Afterpay transactions at Square sellers year over year, and 16% growth in Afterpay app usage year over year. And the 5 largest Afterpay items categories outside of fashion and beauty were hardware, home and garden, arts and entertainment, office supplies, and electronics. And here I will go to my next point, is the fact that Block is building out that great ecosystem. Also something that PayPal still needs to do much better, right? They have Venmo, an extremely powerful product, and yet it's not very well implemented in the whole PayPal ecosystem. This is one of the things that they will be working on moving forward, but this is something that Block already announced quite a while ago. Afterpay, Cash App, Square, it's all working well together, can be working much better. This is also something they are working on right now, which leads me to the press release that we've got for Q3 and what made analysts actually like this stock yet again. So they are going back to that rule of 40. So they say here, we believe we will reach rule of 40 in 2026 with an initial composition of at least mid-teens gross profit growth and a mid-20% adjusted operating income margin. We will provide annual guidance on these targets until we reach and sustain them, at which point we will reevaluate our guidance principles. Now, they're saying here also, as we progress towards rule of 40 in the coming years, we expect our margin profile and free cash flow generation to improve as well. which means we can return more to our shareholders over time. I mean, finally, like I said in the earnings video, they finally understand that they're not running a charity, but they're running a publicly traded company, which is why they announced here the initial authorization to repurchase $1 billion in shares, which will offset a portion of dilution from share-based compensation. Moving on to cost cuts, they are creating an absolute cap on the number of people that they have at the company that will be held at 12,000 people until we feel the growth of the business has meaningfully outpaced the growth of the company. I still think that 12,000 is too big of a number, but hey, I don't run the company, so I can't really change that. Moving on to analyst comments here after those announcements were made. So Evercore RSI, they talk here about the expense focus, and they say that this might limit its growth. So while necessary, such will likely slow the rapid pace of innovation, which fueled Square's success, challenging future revenue and gross profit growth in their view. In my opinion, I think they can do both. Moving on to Truist Analyst, he says, although we think Square faces heavy lifting to reaccelerate GPV growth as it moves upmarket into complex merchants, we sense a renewed sense of urgency. I 100% agree. Continues by saying here, as Block pulls its two ecosystem closer, that will increase monetization. And I think that with the Black Friday Cyber Monday numbers, we can already see that in full effect. Moving on to JP Morgan, they talk here about the meaningful operating leverage that they have here, and repeating what Jack Dorsey said, it's focusing a lot more on getting products and features to our sellers and to our Cash App customers much faster. I mean, it's truly amazing what you can do when suddenly you focus on your customers, when suddenly you focus on your business, on your shareholders, rather than trying to run a charity and to please every single one. Which is why we can see this reaction since the end of October. The stock has been going up each and every week. This is on the weekly, so every candle here, every green candle is a green week for SQ, for Block. Yes, RSI is creeping up to be maybe a bit too high for some people, but right now we're at 58, so nowhere near still being overbought. In my opinion, we will face some resistance at around $80 or so. That's where we were rejected a couple of times in the past. But until then, a lot of things can change macro-wise. Going into 2024, election year as well. 2024 will be the year where interest rates will come down. We are already seeing a lot of signs that inflation is coming down faster than expected. Like I said, if rates do come down, inflation continues to go down as well, huge tailwinds for fintech companies, not just Block, not just PayPal, but the whole fintech sector. So I remain bullish on Block. I remain bullish on my position on PayPal as well. Of course, I'm biased since I hold it, but like I said, a lot of fintech players that are in good positions will definitely outperform in 2024. Of course, you might disagree, you might agree. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.